Where is the global economy heading in 2024? Well, hello there, dear viewers. We're delighted to have you following and subscribing to our channel, and don't forget to hit that notification bell. Now, let's dive into the economic landscape. In 2023, the world grappled with persistent disruptions in global supply chains and soaring prices for goods and services due to heightened demand. In response to inflation, the Federal Reserve steadily raised interest rates, hitting a 22-year high at 5.25%. This led to a decrease in liquidity, reduced spending, and diminished demand for goods, ultimately resulting in lower company profits and the onset of a recession. According to the International Monetary Fund, IMF, global growth is expected to dip from 3.5% at the close of 2022 to approximately 3% by the end of 2023. Now, the burning question is, how will the global economy fare in 2024? According to Goldman Sachs's projections, we're looking at a higher annual average growth rate of 2.6%, outperforming the economists' expectations in a Bloomberg survey at 2.1%. This optimistic outlook is fueled by easing inflation and major economies mitigating the risk of recession by potentially lowering interest rates at least 3 times, each time by a 0.25 percentage point, as indicated by the US Federal Reserve. The IMF anticipates a 2.9% growth in the global economy, with global inflation decreasing from 8.7% at the close of 2022 to 6.9% by the end of 2023, continuing its descent to 5.8% by the close of 2024. In 2023, expectations for record highs in stocks were met, with global markets displaying positive performance. Notably, the S&P 500 index surged by about 23%, and the Nasdaq index leaped by approximately 42%. The stocks of technology giants led the market gains, benefiting from the boom in artificial intelligence. Nvidia witnessed a staggering increase of 220%, Meta grew by 170%, Amazon by 75%, and Microsoft by 56%. According to the Fear Index on Wall Street, global markets are poised to continue their ascent in 2024, thanks to potential interest rate cuts, translating to reduced borrowing costs for companies, thereby boosting their profits and growth. This, in turn, stimulates demand for their stocks, breathing new life into financial markets. Financial data analysis company FactSet anticipates that corporate earnings will grow by about 6.7% annually in the first quarter of 2024 and 10.5% in the second quarter. Bank of America and UBS Capital are optimistic, predicting a 10% increase in the S&P 500 index, reaching its all-time high at 5,000 points by the close of 2024, with technology stocks continuing to lead the way, riding the wave of increasing benefits from artificial intelligence. Turning our attention to oil, it's on the path to recovery in 2023. Brent crude hit its lowest levels near $71 in June amid recession fears due to ongoing interest rate hikes. It later soared to its highest level near $95 in September due to expectations of supply shortages, despite Saudi Arabia and Russia extending their voluntary oil production cuts until the year's end. However, Brent crude dipped below $80 again in December due to weakened economic activity in China, the world's largest crude oil importer, and a staggering 99.2% year-on-year decline in Chinese oil demand in November 2023. Major banks, including Citigroup, JP Morgan, and Morgan Stanley, anticipate a recovery in Brent crude prices, reaching an average of $85 per barrel in 2024. According to OPEC, global oil demand is projected to increase from around 102 million barrels per day in 2023 to 104.4 million barrels per day in 2024, driven by accelerated economic activity in China. Now let's talk about gold. In December 2023, gold reached a new historic level, hitting its highest ever at $2,150 per ounce, amid increased demand as a haven during global tensions. According to UBS Bank's predictions, gold prices are expected to continue their upward trajectory, reaching $2,200 by the close of 2024, fueled by growing investor interest in gold due to expectations of interest rate cuts and a weakening dollar.